morning, all. Appreciate you being here. It's up to 72 degrees in Sebring. We're at 8:41 now.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
Now that means it's time to check in on what's going on Wall Street with the able assistance of Philip Statler from Statler Financial Services in downtown Sebring, who is coming to us from, in the words of Vice President Cheney from a few years ago, an undisclosed location from cell phone this morning. Philip, good morning. How are you?
Good morning, Dave. Hey, I'm doing well today. It is Friday, and it has been a rough week. I mean, we're seeing numbers now that they say we've not seen this kind of week, especially in the Dow, since October of last year.
I believe every word of that because yesterday was just downright oily. We ended up losing 785 points in the Dow yesterday. That's a full 1.6%. Standard & Poor's was down another full 0.5%, down 39. NASDAQ actually was the best of the bunch yesterday. It was only down $59, down a little bit of more than 0.25%. And the Russell 2000 joined the party by exceeding everybody's expectations, fell 1.9%. It was just a greasy day on Wall Street, wasn't it?
It was, Dave. And to kind of give you an indication of volatility, the VIX yesterday for the S&P 500 was up 11.25%.
Woof! That hurts. We're looking at the price of oil being the driving market and all of this. Nobody's happy with the shooting war going over in Iran, but I've got oil up above $86 a barrel this morning. And you and I were talking before we went on the air that the price of diesel is going up even faster than the price of gasoline. If you don't like your price of gasoline looking at $4 a gallon before long, diesel's gone up even worse, and that's going to end up causing us transportation issues. So transport-related stocks, I got to assume they're probably going to suffer worse than even most of the other sectors are, wouldn't you guess?
Well, I would think so, Dave. I mean, I saw diesel at $5 a gallon this morning, heading back to Winter Havens.
And that's not fun by any measure. And then we bring it up to the morning after getting that shell shock from our oil prices with the unemployment report the government puts out in the first week of every month. And it was about as bad as you can expect it to be. Economists were expecting, depending upon who you look at, they were looking for a gain of either 50 or 60,000 jobs added, which would have been mediocre to say the least. According to the government, we actually lost, I repeat, lost 92,000 jobs last month. Yeah, I get delayed quotes here, but I'm looking at just what I saw on my delayed quotes, and I got to believe the markets are not happy to hear that.
No, they weren't, Dave. When that number hit across the board, the tickers really started to drop, and it wasn't quite a double drop, but it was pretty doggone close to it as we look at that. That minus 92 for February jobs was a shocker, I think, when you expected 50,000 positive, and like you said, that's mediocre at best, coming off of January's number of being up 126,000.
Yeah, I mean, you got to take a smooth average in the process and hope upon hope at the very least it's just a data point. But at the same time, that is resoundingly bad news. The only close to news that you can take any hope for is that all it ended up doing was it ticked our unemployment rate, the official unemployment rate, up to 4.4% from January's 4.3, so it wasn't as bad on the overall numbers. But we've been talking for a long time about how the layoffs we keep hearing about aren't really showing in the employment market. Well, all of a sudden, a few of those chickens came home to roost last month, didn't they?
Yeah, they did. And I think, Dave, I mean, maybe this is a revised number, but they revised January to unemployment rate of 4.4. So there's no change really in unemployment rates month over month.
So we'll take that as being the only crack in the armor of bad news that we had in the process. Other things going on. One of the things just adding on to the fun yesterday that prompted us to fall like a rock was in the Iran war, we ended up having a missile thrown from Iran in the direction of Turkey. We shot it down, but you got to keep in mind, Turkey being a NATO member, they can choose to invoke the NATO provision that says an attack on one is an attack on all. That didn't help the markets yesterday one tiny little bit, adding it onto the price of oil. It just flat out is looking downright ugly around the marketplace. Add to another thing out there were a few court decisions yesterday that didn't help things a bit. You and I were saying, oh my God, if this happens, it's going to be bad news when the Supreme Court struck down President Trump's Liberation Day tariffs. Oh my gosh, what's going to happen if we have to give the money back? Well, the federal court yesterday rejected the Justice Department's efforts to pause consideration of the issue for 90 days. The lawsuits about getting the money back that we took in from tariffs, that lawsuit is continuing to go forward, and a judge isn't allowing for even a delay in consideration, which tends to indicate that the judge thinks that the people looking for tariffs have a strong case for winning it, and that's not good news for our balance of payments on the current funds, is it?
No, it's not. And of course, there'll be appeal after appeal from the government side to slow that process down.
Absolutely, and they're not succeeding in slowing it down very much lately. Reports coming out. We still have some earnings season reports coming in, even though we're already crossed the first of the month by a few days. Discount retailers, popular price clothing. How did the Gap do last quarter?
The Gap, well, they kind of missed on earnings anyway by a penny a share, came in at 45 cents. Revenue came in as expected, but that's just not good for Gap. That's got them trading down almost 9% this morning.
Which really, in the context of the way the markets are looking right now, doesn't sound as bad as it sounds in a vacuum, does it?
No, it doesn't. And let me just go back to one of the other numbers that we didn't talk about because it's a delayed report, and that's U.S. retail sales for January.
Mm-hmm.
They were down 0.2%. I will say that's better than expected. They were expected to be down like 0.4. So, but that kind of ties into retail's just having a tough time in a lot of places right now.
Absolutely. The only good thing that can be said is January tends toward being an off month anyway, but at the very least, we've got some overachieving the expectations. Any other reports to share before we do the numbers?
I got one more for you. It's called Marvel Technology, not the comic book company, but the technology company. They do the integrated circuits, semiconductor products, that kind of thing. They had a good quarter. Beat the marketplace on both earnings and revenue, and they expect their year-over-year revenue growth to increase each quarter in fiscal 2027. So they came out with some good news, and it's reflected today in their stock price, up almost 10.5% this morning.
I'm glad to have some good news. Resetting the table in the morning, like you said at the outset, the Dow's cruising for the first week in eons now. Doesn't look like today's going to happen after a bloodbath in the blue chips and in the small caps yesterday. How are we doing 45 minutes before the market opens?
Continues to get uglier, Dave, uglier and uglier. We've got the Dow down right now about 1.15%. We've got the S&P 500, the same range. NASDAQ 100 is down 1.4%, and the Russell 2000 is down 1.9%. And the VIX is up another 9% this morning. So it's going to be a rough day today. It looks like getting started. On the other side, we got silver up 2%, still nowhere near its high. Gold is up about 1%. Crude oil, like you indicated earlier, right now is up 7.25% to $86.85 a barrel right now.
That's even worse than I had on my delayed quotes on the oil. Looking across the ponds, the Asian rim generally is recovering, which was kind of weird. Japan was up by 0.6%, and the mainland Chinese markets were up fractionally by about 0.33% at the 6 a.m. close this morning. Europe, on the other hand, is almost as unhappy as we are. Everybody's in red ink this morning. The average European index is down by almost 0.9% halfway through their trading day. Yep, just updated again. They're going in the wrong direction as well. By the time we're done, we'll probably be down by well over 1% on the European markets as well. Getting a picture as to how in the heck I can preserve my retirement in the face of a marketplace like this, I need your help. How do I find you to get a look at my retirement plans?
Yeah, then give us a call at 863-382-0037. Schedule their core retirement analysis. It's just 30 minutes. That's looking at where they are and making sure that they're heading in the right direction for their retirement. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And newstalk730am.com as well. My friend, you have a good day, and we'll just try to forget the markets for a few hours anyway, because they're probably not going to help us much, are they?
They are not. And I will talk to you next week.
All right, we'll see you next week. It's 105.7 Light FM and Statler Financial Services, Philip Statler.